Thank you to everybody. Good morning. And I want to thank you for your patience and the shifting around of the timelines and that and a few technical difficulties, which someday they will get it perfect over at Zoom. But thank you for your patience. My name is Liz Ojeda, and I'm a business consultant with the Mountain Plains Minority Supplier Development Council. Banking Made Easy, a relationship building that leads to better banking, is brought to you by Border States Electric. Theodis Watson is a native of Kansas City, Missouri, and an assistant vice president and community business relationship manager for the Central Bank of the Midwest. Theodis serves as the Western vice president of the Urban Financial Services Coalition, which partners with the chapter presidents from Kansas City, Puget Sound, San Francisco, and Omaha. And he serves on the board of United Intercity Services, which is an organization that was created to strengthen the health and vitality of its neighboring communities by providing family assistance programs to early childhood care services. Theodis is also a certified FDIC Money Smart Alliance trainer for both personal and business. Serves on the Prospect Business Association Board, an organization that focuses on the redevelopment of Kansas City's urban core. Theodis received a bachelor's degree in communications and public relations from Missouri State University, Springfield, Missouri, and a master's degree in business administration from the University of Phoenix. He's married to his beautiful wife, Yvonne, and has 3 amazing children, ages 4, 7, and 20. Wow. Okay, please welcome today, Theodis Watson. Thank you.
Thank you, Liz. I appreciate you that introduction. I believe there was someone asking how they switch rooms. Do you know how to switch rooms? They may have found it out because I don't see them on here anymore.
Yeah, I was advised. I know there's several people that are still in here. We appreciate your patience. And they're in the process of switching those out. There were some technical difficulties. So I told them who was in the rooms that are still in there. Thank you.
Okay. Yeah, it seems like there's some people coming in. So no, I appreciate it. And so I'll just introduce myself again. I'm Theodis Watson with Central Bank. We are a regional bank here from Missouri, Kansas, and Oklahoma. We are, doing a great job here, growing our footprint. And my role is I'm the small business representative and SBA support system here at the bank, lead those departments. And I coin myself as a community banker. The reason why I do that is because I had the experience to work from the low to moderate income areas of Kansas City to, managing one of the wealthiest areas in Kansas City as far as the Plaza area. And now I'm a commercial lender in the Overland Park area, which is also one of the wealthiest communities in America. So I'm very versed in both sides of the coin, but I enjoy educating, working with small businesses, building that relationship. And I just feel like I serve anyone who asks questions. So I'm all about that. So today we're going to talk about financing your business and what to expect. In the past, I talked about building a relationship, and we'll talk about that here as well. But I think it's very important for individuals to understand the language about what's going on, hear it from your banker, hearing it from other professionals, hear it and how the banker and the business owner can communicate with one another. I think of it as like sports. As I said in our last class, it's kind of like basketball, and I'm not a soccer expert, but I will try to do my best in the soccer area. So as far as basketball, we dribble the ball with our hands, correct? And then also in soccer, you dribble with your feet. In basketball, you do the layup, which should be an easy, quick shot. In soccer, it's a chip shot, right? You shouldn't miss those. I think basketball, you hit it, you do a triple double, 3 rebounds, 3 assists, 3 steals. In soccer, you have a hat trick where you may score 3 goals. All of them are very important. All of them are amazing feats, although they mean the same, somewhat similar thing, but they're different, right? And so I think from a small business and a banking standpoint, they are likely saying the same thing, but different ways. And so my goal today is to be able to give you some insight on what that means, where we are from a banking standpoint, to try to hopefully help you build that bridge and build a better relationship with your financial institution. So this safe harbor statement is basically saying, hey, this is not legal advice. This is not financial advice. I'm just really sharing information, saying, hey, continue to lean on your own advice and your other resources. But ultimately, we're just here to kind of share information to help us all be better business owners and bankers. So the why am I here and why is it important that you all are here is 2 out of 3 net new jobs in the U.S. are created by small businesses. 30 million small businesses in America account for 54% of all U.S. sales, and small businesses provide 55% of all jobs in the U.S. since 1970s. The 600,000 plus franchise small businesses in U.S. account for 40% of all retail sales and provide jobs for some 8 million people. So very important what you all do. And then giving a shout out to my ladies, more than 11.6 million firms are owned by women, employing nearly 9 million people and generating 1.7 trillion in sales as of 2017. And of that, 5.4 million firms are majority owned by women of color in the US. And these firms employ 2.1 million people and generate 361 billion in revenues annually. So again, small businesses matter. What you all are doing are phenomenal. And I truly appreciate all that you all are doing in our respective communities. So a few things that we're going to talk about today. We're going to talk about the 5 C's and why that is important. We're going to talk about the bank expectations and also SBA financing, credit enhancement opportunities. I think the more we know about these things, the better, right? And that conversation, that language that we communicate, that building that relationship with your financial professionals, if understanding what we mean from a banking standpoint is crucial to help you be successful and ultimately getting you the funding and the financing you may need to be successful. So we're going to talk about the 5 C's of lending and why this is important. And so these are things that we look at before we kind of dive into the numbers, right? So we're going to look at your character. So the history of your past lenders. As you know, just like with any other industry, bankers talk. We all know one another. We know what businesses are out there. And so we're going to ask questions if there is an opportunity, if we have questions about this particular borrower. If you're a great borrower, or if you're a great business and borrower, we're all fighting for your business. If we all have heard challenges that, hey, you have been an issue or a challenge trying to get repayment for whatever reason, we talk about that too. So just remember that your past experiences does matter. Legal issues, do you have any personal legal issues? We all have done something here or there that we're not proud of, but where are you at today? How did you recover? We're going to ask those questions because we want to know how you have improved or what you're doing. If you have a shaky past, then we're not saying that you're shaky, but we need to understand where you're going forward if you're still that same individual. And does that individual business seem trustworthy? Is that some type of business that we want to get behind? Does that sound like something that could be a concern for the bank and regulatory reasons why? We need to know that. So that character really plays a major factor into us wanting to do business. And I also say that trustworthy piece, it goes twofold, right? It's for your banker as well. If your banker does not seem trustworthy, he is not or she's not responding in a timely manner or giving you valid suggestions, yeah, you might want to find another banker because we're fighting for your business just how you want to do a business with us. So it goes twofold in that area. Capacity. Do you have the ability to repay? Do you have positive tax returns? And what I mean by that is if you show negative tax returns, and I understand why some businesses do it, but if you consistently show negative tax returns year over year, what that does show as a banker that you do not have the capacity for another loan. Yes, your gross sales say, hey, you're doing this, but if you are not, that net income does not show that you can afford another payment or another, responsibility, then we may not feel comfortable doing that loan. I say not self-prepared because if you are $1 million a business or a $500,000 business, honestly, you should not be doing your own tax returns. It is very important that I tell my clients, you cannot afford not to have an accountant or a CPA working with you. The reasons why is not saying that, you doing yourself, your tax returns yourself, you're not competent, you don't have the ability to do that. But what it does say is, hey, is it legitimate, right? Is this business really making this amount of money? But if you have an outside party who is credible, who are doing your tax returns, now that might make us feel a little bit more comfortable about those numbers, because hey, now we know this firm. We have an individual here who has a third party being objective about his financials. We can kind of stand behind that. And then when we talk about understanding your cash flow, do you understand your business? Do you understand the ebbs and flows of your business, the cyclical business and times of your business? It's very important to understand that. And can you afford our loan or whatever our product may be, based off of that information that you're providing? So understanding your business and your cash flow and the ebbs and flows of your business is very important when we are concerned about the capacity of your business. Collateral, assets willing to pledge. I just want you to be surprised. Don't be surprised if the institution asks for you to place a second on your home, because you may not have enough personal assets on your business side or your commercial assets. So now we may need to tap into your personal side. Very important. So don't be surprised. We may ask for that. And what that means is we don't want your home. We trust us. We're not in the mortgage business where we want to be property real estate agents. What we want to do is minimize our risk for the bank. So, hey, if as long as you are doing what you're doing, we were not interested in the property. However, if the business is, has some challenges, unable to continue to perform, then at least from a stakeholder standpoint, we secured our credit. On top of that, from a regulatory standpoint, our regulators look at us saying, hey, why did you do this loan? If this borrower did not show they had the capacity to do this loan, we could get in trouble from a regulatory standpoint. So it's not just a banker being mean because he didn't approve your loan. Hey, there are some things that we look at to determine if we can feel comfortable with doing this deal. Capital. Do you have the reserves for the what if? Just like your personal side, hey, your tire might blow, your air condition may go out. Those things happen. Same for the business. Do you have reserves for the what if in your business? Do you have some reserves available for you when those lean times hit? Let's talk about liquid assets. Do you have cash, or do you have assets that can turn around in less than 30 days? Let's just say if you have a tough month or a rough month, to ensure that the bank continue or the credit union continue to make payments, that you can make payments to the financial institution. No one knew that the world was going to shut down last year, right? Did you have the ability to repay certain loans during those lean times? Hey, your industry may have a serious challenge because whatever the pipeline or the whatever's going on in that industry might be affected by a hurricane or whatever. Do you have the capacity to continue to keep business floating? And that what if reserve and that capital is very important. And also, like a lot of loans, we may request that you put up 20% or 25% into the deal. So we'll finance 80, but hey, you might be responsible for 20% of it. Do you have that available? That's a big deal. So you got to make sure you have that capacity available to cover that margin. And then we talk about conditions. What's the state of the economy? So you're in this business and you want to grow into this business, but if the economy is not being favorable to your industry, just don't be surprised if banks and credit unions are not comfortable with doing loaning in your industry. We look at those things like, for example, hotels. Not saying that nothing's wrong, but last year there was, hotels were not being filled because of the pandemic, right? So were we doing new hotel loans and excited about them? Probably not, because people were not going into hotels. Everybody was staying home. So that might be due to the economy being what it is. We not be encouraged to going into that space. Trends in the particular industry. Again, is that a declining industry? Is it a growth industry? Is it a mature business? We're going to want to know that while we're doing your loan, because obviously we're looking out for you. We're looking out for the best interests of our shareholders to ensure that, hey, we're investing in a thriving industry. location of business. Are you looking to buy this restaurant behind this wholesale location? Yes, we like you and we know your food is good. However, this location might be a challenge and we may not be invested in buying or loaning into this space. So it's very important that, when we share our feedback, you understand that. Not saying that we're just doing it just to be facetious or to say, hey, bank's not for you. No, that location of business is a challenge for us. So we may not feel comfortable loaning on that because that may not seem as a good location there. And then lastly, supply versus demand. Does your business have a supply and demand? Is it something that people are interested in? Do you have a market? We're going to understand that. We're going to do our research on that because we want to make sure we are working with a business that has the ability to repay, has the ability to grow, rather than it's a hobby and you just like to sell these widgets. That may not be something that we may not be interested in. Liz, you had something?
No, we don't have anything at this time, and we still have about 10 minutes,
Oh, 10 minutes.
15 minutes before Q&A.
Question.
Thank you.
Okay, so preparations. So we talked about, now that you understand kind of what we're looking at from a 5 Cs, what are some things you can do to kind of have you a better chance of getting a loan approval? So, you got your business banking application, you got your business plan. I'll talk briefly about that. Business plan, we don't want a James Patterson novel, but we may want some things that are out of that. So your experience, your projections, who's your market, where do you see yourself going in the next few years? Those are things that we'll pull out on a business plan. The business plan is mainly for the business to keep them on track. We may ask for the last 2 or 3 years of personal tax returns. We may talk about your interim profit and loss and your balance sheets. We may ask for a schedule of debts. And basically what that is what all does the business owe on this business? We want to know that, so hopefully it does not affect your ability to repay our loan. Personal financial cash flow forecast, again, your projections. We may want, the first year, maybe month to month. The second year may be annual. That just kind of helps us see where you may see your business going and how attainable they are. So are they attainable goals that you can actually meet? Are they realistic? And if not, that might be a conversation that your bank may have. Personal financial statement is simply basically a document that shows what your assets and liabilities are as on a personal side to see how strong you are as a borrower or a guarantor. Proposed collateral, what is that collateral? Is it strong? How do we leverage that? And also, does the borrower know its business? How well does that business knows? How long does that borrower know its business? We want to make sure you know everything about your business. And if you don't know, that's fine. But how well are you able to research that to come back and say, hey, this is the answer? These are definitions. And again, I think we're going to share this with the group, but these are definitions about that you may hear your banker use. So the better you are prepared to understand these topics and understand these various definitions, I think the better you are prepared to come and having a conversation with your borrower. And if you don't know these, or if you are unaware of knowing what these are, I encourage you to Google and go to a small business development center or a business service organization who can help you prepare you for coming to the bank and developing that business relationship, a lending relationship. Here, we're going to talk about frequently used terms as we talked about here. So, these are things that your banker will talk about when we're looking at your financials. We're going to be looking at your gross annual revenues, your net profit, your debt leverage ratio, your debt to service coverage ratio. Typically, most banks want to see a 1.2 debt service coverage. That just kind of tells us that, hey, you have some ability to service our debt based off of the amount of revenues that you're making, and of course, what's your cash flow at the end of the day. So now that we've gotten time to get personal, now we've made it there. Now your banker may see how we can continue to tighten up your lending relationship. How do we know you know your business, right? So what other sources of income? Do you have rental? Do you have rental income? Do you have another side job that you may have that can help support the loan? What is your personal credit looking like? Yes, I know this is a business loan, but we're going to look at your personal credit to determine how strong you are individually. And then your relationship with your banker is so important. I always say, come to your banker before you need the money. Go to your banker now. Go talk to them now. Introduce yourself. You don't know who they are. Build that relationship because that is so important now. So when you grow and may need a loan, you can go to them and ask for additional information. Not only on top of that, bankers have so many other resources they can share and provide to business owners that can really help you grow your business. So now we're talking about the one-on-one conversations. Now you were ready, you got your packet. Now you got your application. Now you got your documentation. Now what kind of loan do you need? So, these are the various types of loans that are available. So we got the acquisition loan, we got the commercial loan, we got the real estate, the equipment loan, we have the refinancing of existing term. If you have a loan right now, might be a good chance to see, what other options are out there. 3-4 years ago, interest rates were a little bit higher. Now they're a little bit lower. You might be able to refinance that existing loan. Vehicle loans, line of credits and revolving lines of credits, commercial business credit card. This is something that I talk about a lot. Establish that with your bank, because now if you have a business credit card with your bank, and you may have that for 1 or 2 years, you used it, had a good payment history. Now you're looking to buy a building. Now you're not a new lending relationship because you've had a business credit card. Now they can say, hey, okay, well, XYZ company has paid as agreed. Now we would feel a little bit more comfortable with doing this equipment loan or building this purchase because now we have a lending relationship, not just a deposit relationship, a lending relationship. And then we're going to talk about SBA here real quick. So obviously the SBA administration, they've been involved with the PPP and all the various programs that are out there available. But ultimately their goal is to, loan business and new and existing businesses to create jobs. They provide resources and counsel to small businesses, and they really kind of help businesses if you're, in the wake of a natural disaster. There's funding for individuals for that. So they are a great partner in the business community, specifically banks, because they can kind of help us when we may not feel comfortable doing it on a conventional note, just on the bank. We can bring in the SBA to kind of support us. So SBA financing is there to, there's a shortfall in collateral. So you may have your house, but you still need a little bit more collateral. The SBA is there to help. They generally, depending on the loan terms and the type of program, they have longer repayment terms and lower payments. No balloon payments. We're not going to call your note and, make sure, hey, at this time, we need to collect this note. No, we cannot do that if it's SBA connected. The borrower retains full ownership. There's an SBA guarantee. And we talk about smaller equity injection. And what I mean by that is, hey, normally we may need 20-25% on a deal. If they go SBA, typically banks can get by with only having 10 to 15% equity injection, depending on that deal. But normally we can request a smaller equity injection in the deal. We will need, projections are considered for startups and early stage businesses. So with the SBA financing, instead of you having actual data on the business because you're a new startup or new early stage business, you may not have that 1 to 2 years worth of business. We can review our lending based off of your projections. And then at the end of the day, it gives you access to capital, which is key. SBA misconceptions. They provide loans directly to customers. No, you have to go through a bank or a financial institution to get the loans. SBA loans are not grants. You got to typically pay those back. Those they're not giving away money. SBA loans are only for those with poor credit and cannot find capital elsewhere. That is not correct. You still got to have decent credit. Banks still have to underwrite that as we would do any other deal. And it is something that, we still have to kind of we have to be prudent in our lending. Is something that they consistently say when we're still doing SBA loans. Must be fully collateralized. So, hey, we're going to still want to tighten up our collateral as much as we can, although it may be a shortfall. But it doesn't have to be 1-to-1. We're going to try to tighten up our collateral position as best as we can, but it does not have to be fully collateralized. And the other one is SBAs are a nightmare and difficult to obtain. I'm not going to say that they're not a nightmare. I'm not going to say that, but I will say that there are some challenges. A lot more red tape. There's a lot more paperwork. We might need your firstborn. I'm joking, but I'm just telling you that there is some other additional documents that we may not need from a conventional side that we will need on a SBA. SBA financing is used for this: collateral shortfall, as I talked about, longer payment terms, access to capital, projections are considered as far as what we look at financials. This is a SBA 504 loan. It's a type of program within the SBA program where it's a long-term fixed rate financing. It's normally used for commercial real estate or purchasing heavy machinery or equipment. They partner with the CDC and the SBA and other financial institutions to get this deal done. And so, it's just one of those things that it's a great partnership for the banks to be able to do these loans for our borrowers. The standard 7A loan is typically the flagship type loan. You can go up to $5 million in this. It's designed to help start and expand businesses. You can refinance existing debt within this program, and you can purchase pretty much inventory, equipment, machinery, working capital, and also acquisitions, which is a major deal going on these days. Other types of loans, I won't go into them because there's a little bit more detail, but you have a line of credit. If you do SBA exports, so meaning you do any type of international business, micro loans, so there's some SBA micro loans out there. And if you're a veteran, there are some various advantages to doing loans for veterans and involved in the business or in the SBA program. And so basically, once you do that, basically, as you get your loan, if we go conventional or we go SBA, just so you understand the process, you've met with your lender, you got your credit report pulled, you'll need to wait at least 7 to 10 business days to get a decision. Please, this is not a 24-hour turnaround. We have to do documentation. We have to do work. We have to kind of do our analysis. And then once the lender decides to move forward and say, yes, the deal's been done, your loan could take up to 45, 60 days, depending on the type of loan we're dealing with. So be patient, let your banker do what he or she needs to do. But that's why I always say, come to us before you really need the money so we can have time to do what we need to do on the back end and not rush the deal through. That is my story, and I'm sticking to it, and I'm open for Q&A. Does anybody have some questions or answers that I can assist with?
Actually, we do have one question in chat that came from Marvin Robinson, and he asked about thoughts about CDFIs and or Bitcoin or cryptocurrency in the small business areas, especially from institutional banking perspectives. He's looking at the thoughts on this.
Yeah, Marvin, you want to add anything else to this? All right, so I'll chap into that. So 5-minute warning, I got that. So thoughts about the CDFIs. They're great partnerships with banks. They're community development financial institutions. So basically they typically are a bank or financial institutions, but their mission is to do business in the underserved or just in rural underserved in the community. Great organizations. I love it. They're great partnerships. Bitcoin, cryptocurrency, honestly, I don't know enough about it. I stay out of that, so I'm not even going to answer to that. But I understand that that's going to be a way for the future is what I'm hearing, and that's all I know. But in regards to, from a banking standpoint, we love partnering with CDFIs. We think those are great partnerships and great opportunities to continue to build. I work with them all the time from a lending standpoint. If there's deals that I can't do on my side, I will pass them to a CDFI. Hopefully they can get them done. But in regards to, cryptocurrency and all of that, banks haven't really typically got into that space yet. I know our institution have not. There's still a lot of education that needs to go about that, but it is coming up as a wave of the future.
Actually, I do have a question here on here, and this is from a general question from the council. What impact, if any, did COVID have on your company doing business with MBEs? And what are some of the ways you have pivoted?
You know what, honestly, when I came into this role, as far as, leading our small business department and SBA, my goal was to lead our small business, but obviously as a minority, I feel it's my responsibility to tap into the urban core and the minority community. But last year with the pandemic really opened a lot of people's eyes about the, lack of access capital and what's going on. So what we have done as far as PPP, partnered with a lot of CDFIs and business association organizations where we helped get them that PPP money. So a lot of them didn't have banking relationships. That's why I say it's very important to know somebody. I had people calling me 2, 3, 4 in the morning trying to get the money because their bank was not responding. We were able to get it done, right? We were able to help them out. So our bank made sure you didn't have to be a banker. You didn't have to bank with us. You didn't have to be a lending relationship with us. We want to make sure you get the money in this time of need. And what that has done was create some really great relationships now that has spurred through that pandemic situation. And now they're bringing over all their business, and they're really, really great businesses. So that's one thing that we've done. Number two, we make sure we do focus on our urban core. But one thing I love about our organization is, hey, we're going to give you a chance, right? So if we can't do the deal or not, we're going to try to give you a chance. And we also going to give you feedback of why we can't do it, and if that's the case. And what that has done was strengthen our relationship with our CDFIs. So if there is a loan opportunity, as I mentioned, that I cannot get done, I will lean on our CDFIs, give them opportunity to kind of do that deal, because a lot of times they can do things that we cannot, based off of whatever regulatory reasons or whatever, to be able to get that deal done. So those are some specific examples of how our institution was able to strengthen our relationship with the urban core, with the minority businesses, and also, continue to build this bridge and educate small businesses of what the expectations of the bank has for commercial lending and small business lending.
Great. I'm still saying we have a few more minutes here, so I'm going to take advantage of this time. So what are the ways that MBEs can connect with you and the services that are offered? What's next steps?
The next step is, honestly, here's my email, my contact information. I'm a LinkedIn guy. I don't do a lot of Facebook, Instagram, but I'm LinkedIn. Call me. As far as my contact information is here. I love to help. I love sharing information. Again, as I talked about being the community's banker, I feel like it is a responsibility being in this space to share information, provide feedback. So that's the best way to contact. And I also say, go to your bank and ask these questions. Hey, I've seen this funny looking guy on this chat, and he told me this, he's talking about this. How can I help? I encourage you to go to your bank to build that relationship, because I'm sure there's someone in that organization who wants to help and help you see you be successful. So
great. Okay. Well, as we said earlier in the last session, that this presentation will be made available to participants here today, and that will be through the council. And I want to thank everybody. Thank you, Theodotus, for taking the time to share with our MBEs. I know this is really valuable information, and we apply to greater value and profitability for their companies. And we appreciate the time it took you to share this content. And we're at the bottom of the hour now, and we're hoping the information you're receiving is very helpful for your organization. And we try to be really cognizant of everybody's time and effort, and we appreciate your flexibility in adjusting due to technical difficulties at the beginning. You could sit back and relax, because you'll be transitioning you back to the main session very shortly for closing and networking. And stay tuned, prize winners are about to be announced, and you have to be there to get one. You know how that works. So we got some great prizes over here. So definitely, be ready. And again, thank you to everybody. Thank you, Theodotus, for your work and support, and for being here today.
Thank you all. Appreciate the opportunity. Thank you, Liz.